Hi, this is James Shug with Westpac London's end of day report for Monday, March the 18th. Well, of course, the big news today was the market reaction to the EU leaders' announcement over the weekend that the Cypriot bailout would comprise a contribution of more than 5 billion euros raised by a levy on Cypriot bank accounts. The levy being 6.75% on accounts with less than 100,000 euros in them, and 9.9% on accounts of greater than 100,000 euros. Now, this has raised all sorts of concerns, apart from uproar in Cyprus. Markets took the view that there was a risk of contagion into other parts of Europe, and that if Cypriot bank accounts weren't safe, then maybe bank accounts in other parts of Europe wouldn't be safe. And banking sector stocks were marked down very sharply on the open on the expectation that there might be long queues of people trying to withdraw their money from their banks in other countries in Europe. That didn't seem to eventuate to a great extent today, and market losses were unwound somewhat. But nevertheless, the fact that Italian politics didn't deliver a clear election result, and the voters there clearly voted against austerity, the fact that the Greek latest bailout tranche has been delayed for Greece because of the Greek inability to cut the public service as much as required. All of these factors have combined to renew to some extent European sovereign debt concerns. The latest news out of Cyprus is that the banks are going to remain closed Tuesday and Wednesday. They were closed today for a public holiday, and internet banking has been disabled so that Cypriots can't transfer their money to safe haven accounts. But the vote has been delayed until tomorrow, the parliamentary vote. Now, the President doesn't have a majority, and it's not guaranteed that the proposals will get through. And in fact, there's now talk that they're going to rejig the proposals such that the lesser value accounts have less of an impost on them. So this is a story still developing. Other news today, the US NAHB, that's the Home Builders Association, housing market index fell for the second month running from 46 to 44. So it had an almost uninterrupted run from late 2011 to December last year. It's sort of levelled off and fallen a bit since then, with present sales the main driver, component driver of that. Euroland exports rose 2% in January, reversing their December fall of a similar amount, although imports rose even more, so the trade surplus actually narrowed 1.3 billion to 9 billion in January. That's about it in terms of the data. Really, it was the Cypriot news that drove markets today. Losses were much greater at the open than they are heading into the close. It's 4 o'clock in London at the moment. And the London market's down 0.5% now, the French market down 0.7%, the Germans are off 0.8 of 1%, Spain's down nearly 2%, and Italy down 1.25%. The Dow Jones in the US down 0.16%, that's at 14,491. Commodities, well, copper prices are down 2.4% today. The stories of very large and increasing stockpiles of copper seem to have been a factor at play there. Oil prices are down 0.2%, $93.28 a barrel, and gold is up 0.8 of 1% at $1,606 an ounce. And the Aussie dollar, which fell 0.5 cent on the open, well, when was that? Back in Sydney trading, I think it was, with that European news, it's regained a lot of that lost ground, and it's back up comfortably above 1.035 against the US dollar. We've got the Reserve Bank minutes, Reserve Bank of Australia minutes coming up Tuesday, and they'll provide a bit more local direction for markets. All right, that's it for now. I'll be back again, same time tomorrow.